We're winding down to the end of the financial year, just about a week to go. And usually in past years, what this means is that you had to call your investment advisor and take last-minute tips on how you can save tax. There used to be a flurry of activity. You used to have to decide between equity-linked saving schemes, the Public Provident Fund, the Voluntary Provident Fund, the National Pension Scheme, and a whole host of other investments. And you'd have to try and decide whether you had advance taxes due that you missed out on and various other things. Now, it's quite likely that this year and this conversation is the last such conversation that we will have, and that's because of the changes that were announced by the Finance Minister in the budget for 2025, where next year, in all probability, a lot of you will gravitate to the new tax regime if you haven't already done so. But the fact remains that this year, a lot of you will still prefer the old tax regime because it makes sense. Deductions allow you to save more tax. Let's talk about a few tips and tricks that you can use to save tax in this financial year. Joining me is Arvind Rao, who is the founder of Arvind Rao Associates. Arvind, hopefully I've set the context at this juncture for what is going to be an interesting conversation. Let's start with who can benefit, because I'm sure that you've done the calculation. I was surprised to find that I would be better off in the new tax regime, so I have fewer headaches than a lot of other people watching this. So who would benefit?
So I think the simple formula is one has to check whether they are claiming, all those who are claiming HRA deductions. So along with that, the typical ATC, NPS, and the various elements that you mentioned, if all of them put together are adding to 3.5 lakh or more, I would put it as maybe even 3,75,000 or more. With those deductions in hand, definitely old regime will be better for them. And for all those who have no HRA, who have no home loan deductions and only looking to do ATC, can blindly go with the new regime, because for deductions of quantum anything less than this, the new regime ranks better for them.
Now, when it comes to last-minute tax saving, obviously we are only talking about the old tax regime, and there's still another few days in which people can make their investments. Now, ATC is what we're primarily talking about, which is the section that allows people to save up to 1.5 lakhs. There's also ATCCD, which allows investment into the National Pension Scheme. There's ATD. Why don't you explain all of this to us? What are the easiest ways in which you can save tax at this juncture?
So actually, before we go into those details, let me also highlight that the people, especially our viewers, all those who are salaried, can have some relief, because it is possible that maybe they have mentioned to their employer that they want to opt under the new regime, and hence they have not submitted any proofs. But after they hear this, they realize that no, if I were to actually total my deductions and if they are going beyond that threshold, they still want to go under the old regime. It is very much possible to do that, because salaried taxpayers have the option to even opt for the old regime right at the point of filing the tax return too. So typical things that one can consider for ATC would be your public provident fund, your voluntary provident fund, insurance premiums, say your equity mutual funds that qualify for tax saving, all these up to 1.5 lakh. In addition to this, you have an additional deduction of up to 50,000 for contribution that an taxpayer makes to the NPS under ATCCD. Then comes ATD, which is the medical premiums. So you can claim a deduction for the premiums that you pay for a medical cover for self, spouse, and children up to 25,000. Plus, if you have dependent senior citizen parents, that is 60 years and beyond, you can claim additional deduction. Actually, for parents itself, you can claim an additional deduction of 25,000 towards the premium. But if they are senior citizen as well, the threshold goes up to 50,000 as well. Okay. In addition to this, ATE, or the education loan. So if anybody is servicing an education loan, the interest that you pay will also qualify for deduction under ATE.
And there is no upper limit to that, right? You can claim any amount of interest payments through education loans, right?
Not only that, you can also service a loan for self, spouse, or children.
Okay. There's also Section 24, which makes a lot of sense, or at least it made a lot of sense in the old tax regime. You want to explain that?
So I think one of the most favorite and commonly used deduction, which is the interest that you pay on home loans. So for the interest up to 2 lakhs, especially if you're using the home for your own occupation, is what you can claim as a deduction. In case you have let out the property, then you can claim. There is no upper limit on how much interest you can claim, provided you have that much amount of rent that can absorb those interest. The basic rule is that the loss from house property cannot be more than 2 lakhs.
All right. Now, when it comes to choosing which of these in the ATC, there are so many categories to choose from. Would you say that at this juncture, because of the way that equity markets have moved over the last several months, starting in September, that now may not be the worst time to deploy some money into the equity-linked savings scheme? Yes, there is a lock-in period of 3 years, but then that's not such a bad thing, right?
It isn't, but normally what I would talk to people first is that prioritize on the expenditures that you are doing and which qualifies for a deduction under ATC. So, whether it comes to, like, for example, a lot of people may be having their insurance premiums, so life insurance premiums, even the provident fund contribution that gets deducted every month from your salary. For a lot of people, that takes up a good chunk of that 1.5. Not to forget the tuition fees that you're paying for your children's education, whether it's in a school or for that matter, a college as well. Those also qualify for that 1.5 lakh deduction. So if all of this put together still leaves you room, then I think it's a great time to also look at the equity linked savings scheme, because with a lock-in of 3 years, it's a perfect time to make the best from equity volatility.
A quick point to make here is that if you're likely to do the old tax regime this year and you're likely to switch to the new tax regime, then perhaps an SIP in an ELSS may not make a lot of sense. Arvind, you want to comment on that?
Absolutely. Yeah. So for the viewers, just to note that for ELSS, if you generally, as people would say that SIP is the best way to enter into equities. But since today we are in March, in the last week of March, whatever investments that you want this ELSS to fill the gap, those will have to be made lump sum. There is no point in making an SIP for that investment now, because those SIPs will invariably start from April and go on and overflow into the next year. And in case for the next year, chances are very bright that you will qualify, the new regime will work better for you, in which case the SIP will not yield the tax saving benefit to you. Not to forget that each SIP installment of the ELSS has a lock-in of 3 years. So it's not that the lock-in is counted per financial year, it will be per investment installment.
Now, a quick point before we end the financial year is that if you had advance tax due, which is if you had income from any other sources apart from your salary to the extent of over 10,000 rupees, then you would have to pay advance tax, and you've missed all of the deadlines. The last deadline was on the 15th of March. But having said that, Arvind, there's actually a very important point to make. If you're working, if you're salaried, of course, and if your payroll department has not yet sent your salary out, or sent out your, or contacted the bank, shall I say, then you can inform them that you would like them to deduct tax on your behalf. Is that something that you can do?
Either they can do that, which is even possible now. I'm not very sure, considering we are 24th. I think most organizations would lock their payroll by the 24th or the 25th at the max. So that is option A. Or let's say that option has gone past. So what the taxpayer can still do is that they can even try and pay advance tax before the 31st of March, because the way interest for non-payment or short payment of advance tax works is in 2 ways. One is interest for every quarter of advance tax that you miss. And second is interest that starts from the 1st of April till the time you pay these taxes. So although you might have not been able to save the quarterly interest, but you can definitely try and save the interest that you will be paying from the 1st of April till the time you're filing your taxes.
All right, so that's an important point to make. I do want to ask, because in all probability, a lot of investors, a lot of taxpayers are not going to have significant capital gains tax due this year, particularly because of how equities have worked. But the opposite is true, in that if you have capital losses at this juncture, and I think a lot of investors have actually gone ahead and done what is called tax harvesting. Arvind, you still got another 4 or 5 days. Of course, equity markets have bounced back quite sharply, but I'm guessing there are viewers that are tuning in that still have capital losses. Would you say that it makes sense to book them, especially if they're long-term capital losses, so that they can set off future capital gains?
Alex, well, it is, but I think one has to keep in mind that the whole concept of the tax loss harvesting meant that you sell today and book a loss with the hope that you will be able to again buy those scripts at a lower rate in subsequent days. But if one were to look at the trend of the last 8 to 10 days, you might be able to sell today, but we're not sure whether you'll be able to buy it again at a lower price. So I think the viewers will have to take their call whether they want to do this, or they're happy to probably weed out those scripts in their portfolio which are not performing at all, book those losses and adjust them against the gains.
Arvind Rao, thanks so much for joining in and for this very interesting, very valid and topical conversation.